The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, it's a monumental day today in the world of journalism as one of our premier magazines, Newsweek, is printed its last issue, and fittingly, they've put on the cover President Obama and all of his accomplishments. It's a good issue if you want to pick it up and take a look at it, but I can remember back in the 24th of March in 2000, Newsweek, U.S. News and World Reports, and Business Week all had on the picture of the cover a picture of a bull with the NASDAQ 5000 as the moniker. That was the high weekend, and so I remember that quite a bit. So keep in mind, it's sometimes what you read, it's already out there. Okay, main thing today is we were chatting here in the den about 1966 and 1965. And that's the big question, Andrew. The main thing that I wanted to mention to you is as a hobby, and I love looking at old exotic cars. I've always loved cars ever since I was a little shaver. But one of my favorite cars, and the first car that I ever bought new, was a 1965 SC Porsche. And there was one at one of the places in California that sells exotic cars. And so I just wanted to know, what the price of the car was, but it only had 7,300 miles on it. Remember, this car is 51 years old, and it only has, is that 51? 61, yeah. Wow, 61 years old. See, 50, 65. Yeah. Anyway, you wouldn't believe the price of this car. My guess would have been about $200,000 would have been my guess. Folks, they were asking $1.8 million for this car. I said, oh man, I said, talk about tulip mania. I mean, why would anybody, do that? I mean, that's just ridiculous. Anyway, neither here nor there. Okay, these markets started going ballistic last night again after Chairman Bernanke was in Japan helping Prime Minister, the Finance Minister Abe, telling him that you have to pump the money in, and that's what's happened. We had a big move again in the Nikkei, a big move again in the Hang Seng. We had a pretty good move in the DAX. It moved up to made a beautiful ABCD pattern up at the 1.618 at the 61% retracement, and it's still certainly in a downtrend. Now, the first chart that I've posted into Tiger TV today is a request from someone about cattle. As you remember, we had Rich Anderson on last week, and he said if cattle broke below the 109 level, they would probably be heading towards the 106. And as you can see with yesterday's strong down move in cattle, we've already started that. And if we look at it in a little bit longer time frame, going back over the last several months, you're going to see that we have several ABCD structures coming in down here at this $1.06 a pound level in cattle. That's coming down from $1.34 earlier in this year. So we've had a really big correction here in the cattle market recently. So we want to keep an eye on that. There's a couple others that look real interesting this morning. If you recall, we've talked about gold and the importance of that big number that it hit last week at the 1377, which was a 1.618 expansion. And now you'll see that we are coming down to a 78% retracement, which will be $34 down from the high, which is, the harmonic number for gold. Sometimes it helps, but when it comes in at the same time as a 78% retracement, you want to pay particular attention because it's much better to buy gold at 1346 than it is to buy it at 1376. That's just my take on it. But, I'm just an old technician, doing one thing at a time. That's the main thing. All right, let's take a look at the stock market this morning, folks. A lot of news out there about how the market is making new highs. It's not even close to making new highs if you look at the New York Stock Exchange Index. And we have an interesting pattern here over the last several days. From the 10th, you'll notice it's a 3-drive pattern. It's perfectly symmetrical up here at this 2141 level. Whether this is going to be a significant high or not remains to be seen, but the risk on this would be about 8 cents, would be my opinion, and then you would be able to see whether it's going to be moving. Now, we've talked about the bonds for several days, about the fact that we'd made this 1.618 expansion in the bonds, and we were in the process of possibly making a major top. Well, we are now down 3 handles. We're down over $3,000 now from the high in the thing. So we've got, we got a caller from California. Glenn, are you there?
Yeah, Larry, how are you this morning?
Very good. What can I do for you, my friend?
Hey, back in June, you had your friend Bill Meridian on. It was around the 12th or the 13th, and he was talking about his cycles. And what he talked about was the market going down into the last week of June, and then getting a good rally up until August, in which time he thought in September it would get clobbered, I think is what he said. And the market seems to be following what he said verbatim, and I just was curious what you thought of that. I know you're pretty bearish on where we're at right now, so I was just kind of curious, one, if you could get him on again, and two, just kind of your comments.
Okay, I would certainly have him on again. In fact, that's one of my notes to do today, was to give him a jingle, to have him on. Hopefully we'll have him on maybe Thursday or Friday of this week if he's not too busy. But my take on the market is, I look at the New York Stock Exchange Index. That's the real market. That's what's really happening. And when you look at the Dow and you look at the NASDAQ and you look at the S&P, you're only looking at basically 100 stocks, Glenn. That's the bottom line, and that's what they're feeding us. And I just like patterns, and I have this really nice 3-drive today over the last couple days, so I have to nibble at it. Here, I tried it yesterday and lost 5 points, but fortunately I was short bonds and long the British pound and long some oil, so that helped a little bit. But I still think that we're very close in here. This is not, the market is making a new high with certain stocks, but the overall market is, it's not even making a 78% retracement of the move. It might make it today, but we'll see. And if we're really strong again today, we get above 1350 or 2150, then we probably can go maybe higher for who knows how long, because we have so many things that are negative lined up, and if they don't work, that just means that there's something out there that is, much more powerful than I'm even looking at. So that's why you've got to be able to take a shot at it, and if you're wrong, you get back on the horse and ride it again.
Absolutely. Hey, Larry, I appreciate your show and the people that you have on it, so thank you so much.
Thank you so much, Glenn. We appreciate it.
Bye-bye.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed with TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we're taking a look at the German DAX. And as you can see, it's making a ABCD structure on a retracement rally. Remember that the high on this index was 12,000. We're trading at roughly 9,700 right now, just a little under that. So it's telling us that it's far from a bull market. The same thing is true with the Japanese market, and the same thing is true with the Hang Seng in Hong Kong. In fact, all of these are doing the same thing, and we're doing the same thing too if we look at our market, which is the New York Stock Exchange Index. But there's certainly a chance here that we'll be looking at something really a little bit different here down the road if these markets explode to the upside today. And it's certainly possible that they could do that. Now, the next one that we wanted to look at, of course, is the gold market here. I think I already covered gold. Silver is the same as gold, but I'll quickly cover gold again because we're at such a very critical level here, because we know that we made the 1.618 expansion on gold, and it also made a 382 retracement from the high from 2011, and we made another retracement from 2014. So there were major ratios coming together at that time. So it's interesting to see if it's going to hold that level or not. We'll have to just give it a little bit of time to see if it's going to do it. I think the most important thing is that we did hit the 1.618 number in the Treasury bonds. And that's telling us that something big has certainly happened at that level, and we want to be able to see what's going to continue on with it over the next few days and weeks, to see if it's going to continue doing the same thing. The other one that happened that I think is the fact that we are looking at a potential, high in some of these things from a from a major standpoint. If we look at this, since we get back to the bonds here a little bit, if we look at the German Bund, and this is up to date, you'll notice that, and this is equivalent to our 30-year bond. And as you can see, we didn't take out the 78% retracement of the high from the 24th, so it's been 2 weeks now, and yet we gone ballistic and, parabolic, let's say, in the Treasury bonds. Notes didn't, of course. Notes could barely take that high out by more than one tick. So there's something big happening in that interest rate market, folks. So pay attention to it. Try not to get on the wrong side of it. So far, if you're on the short side, it's working okay. It's, it's down 3 points from its high, which is a good thing, but that could reverse, in a matter of minutes. But there's something big out there. I don't know what it's going to be. I mean, today I could not believe it, but 1 year T-bills in Italy were minus again. Can you imagine giving money to someone to hold for you? I mean, hello? I mean, what's wrong with this picture? I mean, people, the reason is it's other people's money. It has to be the real reason. No sane person would give money to people and, have them charge you for holding it. I mean, that maybe it makes sense and I'm looking at it the wrong way. I don't know. But anyway, that's what we're watching here in this interest rate market. We've already talked about the Dow Jones Utilities, how bad that looks on a long-term basis. I don't see that changing anytime soon. We went up and made a 1.618 expansion of the of this long cycle going back from 1993. So this is certainly probably this is the canary in the coal mine, is the interest rate structure, how it would change, something like that. I don't know. It goes back to the story of the Bernard Baruch, don't be concerned on the return on your money, be concerned on the return of your money. And that's what I think is going on. But you hear different things from different people, and we'll see what's going on. The market, this market had a lot of cycles between the 29th of June and July the 5th. And we had some others that happened on Monday and Tuesday. Norm Winsky came out yesterday, and he said he was looking for a sell either yesterday or today, and that could be what he's looking at. Shane Smolian did pretty much the same thing. All I'm looking at is this 3-drive pattern over the past 2 days, set up really nicely, and that's really just a good pattern. You don't have to to be a rocket scientist to try to, work your way through it or anything. But if we get above the, 2150 level, then this is certainly a wrong pattern. So that's the main thing to keep an eye on. Now, there are a couple of things out here that have been working really well that we've been watching really closely. That have done extremely well. As a matter of fact, one of them, of course, is the heating oil futures. They've jumped quite a bit. Gasoline futures, I'll post that here to let you look at it. They've moved up about 4 cents a gallon, and the crude oil has moved about almost $1 a barrel off the bottom. These are major ABCD patterns, and if this is a bull market coming off the February low at 2,600 in crude oil, this could be a potential substantial move. But the bigger one has been, of course, the British pound trade, because that stopped right at a perfect 786 at 128.50. We've now rallied more than 3 handles, which is almost $2,000 in 2 days in the British pound, and we have a new prime minister coming in. A young lady named Theresa something or other, I can't remember, Theresa May, and she might be another Margaret Thatcher, but boy, that's big shoes to fill for any stretch of the imagination. So keep in mind that these are just things, and this is just an ABCD correction in a bear market, possibly in the British pound, but right now we are, quite substantially on the upside on this. And if you're in it, move your stop into that 130.90 level. That's about 40 pips from where it is right now. And if you get stopped out, just look to buy an ABCD correction on the half-hour chart or a 38% pullback, on the daily chart, because it's got a real chance here for a substantial move, because that number that we had came in from 1985 and pretty much was, well, it was spot on at 127 and change. So we'll see what's moving on that aspect. We're trading now at 174 in the Treasury bonds. That tells us that we're still in a downtrend here. Short term, long term, it's still, extremely strong. But I think that is changing, and we'll find out more today. Folks, there's no more time left. I mean, if the market's up today and continues on, then this whole cycle thing that I'm looking at is flat out wrong. And work with the things that are working. The crude oil is working, the pound is working, the oil is working, and the bonds are working. So go to that. Don't worry about the stocks. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back, and I think we have a caller from Massachusetts, Maine. Mark, are you there?
Nope. Nope, it's Mark from Concord, Massachusetts. How are you, Larry?
Concord, Massachusetts. Is that near Boston?
Yes, it is. It is 20 miles northwest of Boston, where the American Revolution started.
Amen. We're probably going to have another one. I don't know where it's going to start, but who knows? Listen, what can I help you with? You asked a question about the S&Ps?
I do. When you did Tom's show on Friday afternoon, you had a real great guest, your astrologer friend, and he said if something to the effect that if we went up on Monday and Tuesday, he thought that we could rally into August. Do you agree with that?
Yes, I do. Today's the last day. There's no more time left at all. The price level is pretty much where it should be. We've made new highs in the S&P, but we haven't done anything like that in the New York Stock Exchange Index. In fact, we're close to making the 78% retracement, but we must close lower today in stocks. And I don't mean just, well, I mean just if we don't close very much higher than where we are now. We're up about 70 in the Dow, but we need the market to be up just very slightly or down, and then you could put your stop above today's high. That's the way I'm looking at it. But remember, Mark, I'm looking at patterns and ratios. I'm not watching any news or anything like that. I just go by what I see with the ratios and stuff.
Right, but your guest on Friday's show had been so accurate, and he was so great. I don't know. I hope you have him back on your show.
Oh, he's having him all the time. Norm Winsky, we have him on all the time.
Yes,
we certainly
yes.
do. Yeah.
And he was so great because he really, when he went to that last chart, he cautioned us. He said, if this thing goes up on Monday and Tuesday, he said he would probably rally into mid-August, if I remember right. I'd have to go back into Tom's archives and re-listen to the show. But
that's exactly what he said.
Yeah, okay, because I was correct. All right, so today will be a bellwether day in the sense that if we go up, we go long here. If we come down, then then we go short. So basically, we keep our powder dry until the end of today.
I think that's the safest thing to do. That's the way it looks to me. But we really have to be strong. I don't do very well buying breakouts, especially when we're up 8 days in a row and we're not getting confirmation and some other things. So I would have to wait. But the things that I'm trading here are working relatively well now, so I'll stick with that and not worry about the S&P. But I am nibbling at it here at 21.41 with a 10-point stop.
Yeah. All right, Larry. Thank you so much. You have a great day. When will you have him back on your show again?
Well, probably next week would be my guess.
Oh,
yeah,
okay.
Every time he has something, he's on at least every 2 weeks.
Okay, because I know he did such a great show with that, so I have to keep listening for your show too. Okay, Larry, thank you. You have a great day.
Thank you very much, Mark. Okay, on to the next one. We're going to take a look now. We're now down. We have a very interesting candle working right now. If this would finish the week, but this is Tuesday, is that we have a potential, really reversing candle in the bearish engulfing candle in bonds, and that could be very important. But remember, this is just the first big correction that we've had, but we're now down 3.5 points, which is quite a bit. This is pushing the stocks higher still. We just made a higher high in crude oil up here at the 46.20 level. If we can get crude oil above the 46.70 level, that's about 70 pips from where we are right now, this market could really move because we had a ABCD structure in heating oil, gasoline, and crude oil all at the same time, and that doesn't happen very often. And if it works, and so far it's starting to work okay, it should do really well. Someone's asked a question about the grain market. Let's just switch gears here for just a minute, folks. We're down at the level in gold that we spoke about, 1345 right now. And so pay attention, because if it starts to accelerate to the downside from here, you're looking at something that is going to be pretty nasty to the downside. So this 1345, 1344 level should be really strong support in gold. And if it's not, then you're looking at something to the downside. I wouldn't necessarily be a buyer right here at 1344, but the exact 78% retracement comes in at 1344. So that's off the low that we made on July the 8th. So that's another one that we're looking at. We're also in the Treasury bonds as we speak. We are making a 61% retracement from the low on June 30th. That comes in at 73.17. We're trading at 173.21 now. So that's another one that looks, really interesting. But we got a lot of strength in stocks starting out. Remember, the first hour is amateur hour. As Shane Smolian from wolftrader.net talked to us about the importance of that 10:30 time frame. That's certainly what you'd want to be watching, because we have now broken through the 3 drive pattern by quite a bit, but that's usually expected given the early morning buying that everybody wants to have. The key figure is 2150 in the S&P futures today, and if we close really strong, then you have to assume that the Bradley model is totally wrong, and we're probably going to go up forever, maybe even longer than forever, but we'll have to wait and see. Now, I would like to mention that Mr. Bernanke, when he was working for the Fed, made about $220,000 a year. I believe his speaking fees are either that or twice that wherever he goes. So it's a pretty good job when you retire from the Fed. So if you do want a good job with great retirement benefits, try to be the Fed chairman and you get some pretty good. Not as good as being Secretary of the State, of course, but it's still a pretty good job. Okay, let's move on to some of the other things that we're watching that should have some bearing on some of the things that we're looking. Oh, someone's asked me a question to put up the Bradley model again, because it does look interesting. But if this inverts for that period of time, oh, hold on one second, folks. There we go. I've got to move this over just a little bit, and then I can get it to. Oh, I can't. There we go. Hold on one second. There we go. There's the Bradley model. As you can see, it's saying there's going to be one hell of a trend from July through Thanksgiving, or to Thanksgiving. So if this thing does invert, look out, because we could really go. I think we're getting ready to make a new high, and we are probably doing that in the Dow Jones this morning. Right now on the opening, we are making new highs. We're not doing that in the New York Stock Exchange Index, but we'll see, what happens, with the rest of this. But, that's neither here nor there. We'll have to let the trading gods decide. But keep a really close eye on 173.18. That's the 61% retracement from the June 30th low in the 30-year bond. And if that holds, it could have one heck of a rally. But the weekend's up, down she comes. 877-927-6648. Oh my God.
Today, many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited time, 5-year, market-safe currency comeback CD. This indexed and U.S. dollar-denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY, or periodic rate of interest, is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com/TFNN now. This advertisement is sponsored content. Everbank is a member FDIC.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back, folks, and we will have Bill Meridian on just as soon as I can reach him. Hopefully it'll be this week. If not this week, it'll be next week. And also, I'll try to get Stan Harley on, the cycle fellow from many, many years ago, who's extremely good. We'll try to have him back on also as a guest to get their ideas of, what we're looking at right here. But the market started off extremely strong. We are, moving higher in the Dow, up 100, and the S&P is up 15. So we're started out the day. That doesn't mean how it's going to finish, but that's how we're starting out. But if we get above this 2150 level, I would assume that we're probably going to go a lot higher, especially if we close in that area. There is no more time left with the cycles. There really isn't. There's you've given it as much possible room on the upside as you possibly can. The same thing if you were trying to, look at a bottom, you would be giving it as just this would be the last day. You have no other choice. Now, I didn't go short, and I went short yesterday for 5 points, and I went short this morning here at 21.51, and I'm going to see how it ends up here at the end of the day. I'm giving a pretty wide stop of 5 points, but remember that I happen to have some positions that are working in my favor that help quite a bit. Being long the British pound from a lot lower and short bonds from a lot higher. So that's what I'm doing as far as watching it. So we'll see. Anyway, it's still early. The first hour is always crazy because that's why they put their orders in that way. I don't know, but the opening price used to be the key price of the day, that first half hour. This was before we had electronic trading and 24-hour trading. It's still helpful, but not nearly as much as it was, back about 15 years ago, where you could literally circle your charts after the first half hour, and if you were above the opening, you could go long, and if you were below the opening and go short, and you would be right about 60% of the time. Those figures are not quite that accurate anymore because of the fact that we do have this 24-hour trading. But if you look at the first hour of trading, that's still a good indicator of where you're really going to go, because after the first hour, if you're down on the day, you have a high probability of closing lower to the tune of about 70% chance of closing lower. Now, you'd have to have one heck of a reversal today in the market to do that in the next 45 minutes, and I certainly don't expect that. But if something like that would happen, it would give us a great deal of information of what we're looking at. As far as the Dow Jones Transportations Index, this market is, still lagging badly. We've had nothing but lower highs here for the past year and a half. Nothing has really changed with this. The utilities, of course, we've already looked at. They're making a 1.618 expansion to the upside. So just mixed markets, but the market has not made any new highs based on the New York Stock Exchange Index for sure. So we'll watch that also very closely. Utilities are under some pressure, mainly because of what's happening, in the bond market. We've already looked at the German bond, what it looks like. It's even more bearish than we are with the others, but that's you can't trade. Well, you can, but you have to have a access to trade German bonds. Unless you're up all night, you don't really need to do that because you have the 30-year bond, working in your favor, and that's the key to keep our eye on. Now, regarding the silver, I wanted to put this chart up, the one we had yesterday. Let's see if I can get this because it doesn't pop up. Doggone it. Have to try something else. Now silver, it would do the weekly silver. That's what I want. I did the weekly gold. I wanted to show you the weekly silver here because you have we're still trading above the price on Friday, which is good at 2020. But we did hit a really important high on last week when we hit 2140. We got to the 382 level at the 2011 high. So we'll see what's happening. So we're having a pretty big up move in TBT today. That we looked at that the other day when it was right at the 1.618 expansion, and now it's jumped up quite a bit. These 1.618 numbers are very, very important, folks. You can't deny them because you see them so many times at major tops and major bottoms, and they're all part of the numbers of sacred science that we look at, of which the Fibonacci summation series is certainly part of. All right, now we had one question. Someone asked a question about corn. Corn just can't seem to get out of its own way. It's still trading down near some really strong support area. The soybeans that we looked at, there you go. Someone just asked about the beans. We'll put that up here. I think we'll put that up here. I know I saved it because I've been watching them very closely. I don't see it though. Nope, I don't have it right now. But sorry about that on the beans. But the beans did make the ABCD pattern. So we have a question here on oil. I think oil has, it's lagging the gasoline and it's lagging the heating oil right now because those. The heating oil was the strongest of the whole group at 139 and change. It's trading at 145 or 146 today, so that's moving up quite a bit. But the crude oil needs to really get above the 46.80, 46.90 level in crude. That's about 80 cents from where we are now. If it does that, then you're going to start to see, some people that are short probably start to cover their positions, and that starts to make the market go. But if we go below 44.40 now in oil, that's a really negative thing in my opinion. So we'll see. The relationship between helicopter money that we see in crude oil, I don't know how that works because if you look at the graphs, it doesn't make any sense to me, why we see some of these things where they are, but I guess it's because of quantitative easing, whatever that is. And, that's neither here nor there. So that's pretty much what we're looking at anyway. But if you're in the crude oil, you should have your stop around, that 44.70 level. That was the area where, you had a whole bunch of numbers coming in between 45 and 44.70. We're trading almost $1 a barrel higher than that. but that's still a little bit early in the game here. Okay, we'll double check to see how we're doing with some of these markets. We're still up on the day, making still near the highs, but we haven't really done too much. We didn't even take out the high yet from last week yet in the New York Stock Exchange Index in the first the prints. Now we've jumped 10 pips off the bottom. We did hit that magic level in the Treasury bonds at 173.18. We're now trading at 173.29. So that's a really key number there, folks. In that number, that's really, really key. So you got to pay really close attention to that. So we'll take a little break here. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. We've got the Dow up about 117, the S&P is up 13, and the Nasdaq is up about 30. It's still lagging, quite a bit behind the market. Keep in mind, folks, that the real market is this long-term chart going back over the last 7 years, and as you can see here, with the New York Stock Exchange Index. We are not even close to the 78% retracement of this move here. Well, we're not that far away. We're about 100 points away, which is quite a bit. That's equivalent of about 200 Dow points. So we are getting close, but we're not anywhere near a new high like we're seeing in the S&P and also in the Dow Jones. So that's neither here nor there. We'll have to wait and see, how the day ends up today, because if we are strong throughout the day, there, you have to, if you're a cycle guy and a pattern recognition guy, you just about have, or a girl, you have to sort of throw in the towel and say, all right, let's get back to what's really working and take a look. Folks, be really important here on these treasury bonds, because this is a huge market, and we hit the exact 61% retracement to the tick this morning at 173.13. We're now trading at 173.30, so it's moved 10 or 15 points. That's a lot. I mean, that's it doesn't seem like it's only 10 points, but when you got a huge market like this is many times bigger than the S&P. You have to pay attention. We need to, if you're really bearish, you need to get that bond below 173.10. That would give you an indication that the 61% failed, and then you're getting ready to move, to the downside. So just pay close attention to it, because it's going to be a real key level. We made a low here in gold at 1342 and change. That's below the 786. It shouldn't have done that. And we need to get, if gold is going to be bullish, it's got to hold right in here. And I don't think it can do it, because we've made those long-term patterns that we looked at over the weekend. So live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.